Yeah. Yeah, I posted this one this morning and um, there's definitely some confusion as to like what this exactly means. Um, um, but what we're looking at here is the 30-day change of long-term holder supply. So we're looking at, for example, what was long-term holder supply on October 12th, and then we're comparing it to today, and we take the net change between the two. And so what we've talked about for the past 2 weeks. Well, let's back it up. Over summer, we started this reaccumulation phase, and we saw that the long term guys were starting to lock up supply via illiquid supply and also just the long term holder supply metric via Glassnode. And so what we talked about is that we're looking to reach this peak hodl level, which we reached, I mean, honestly, faster than I thought we would. We reached an all time high in the long term holder supply shock ratio. And since then, we've started to see old coins being spent. And this is something that we've talked about, this is natural bull market behavior. What you see in these natural dynamics between market participants is that the long-term guys buy weakness, they set the floor in the bear market, and then once the kind of reflexivity of a full-blown Bitcoin bull market or momentum of a full-blown Bitcoin bull market takes off, then you have the short-term guys or new market entrants that come in and buy the long-term guys bags the whole way up. And so, we peaked out. Well, like I said, we peaked out, reached an all-time high in the supply shock ratio. Now we're starting to see those long-term holders distribute. We can see this via long-term holder supply, long-term holder net position change, average spent output lifespan, spent volume age bands, coin days destroyed, dormancy, all these different metrics that are just showing that you're starting to see these long-term guys sell off, and that doesn't mean that the bull market is over. That's just, like I said, natural bull market dynamics. And as you can see, when the long-term guys actually initiated or started to sell previously, that was at actually kind of coincidentally at the end of October of last year. That was at the very beginning of the bull run. And we always talk about how these guys don't perfectly time the tops and bottoms. Like they don't perfectly buy the Pico bottom of the bear market, and they don't perfectly time the Pico top of the bulls. They kind of scale into the bear and scale out in the bull, and so you're just starting to see them scale out, and this is a bullish chart over the coming months. But once we start to see real heavy selling, like as you can see, like in January, the beginning of this year, then you can start to become cautious. And then when we flip green, that's actually generally kind of a bearish signal, because that's showing that the long-term guys have started buying back again, and that's like naturally what bear market behavior looks like. So this isn't something to be like entirely concerned about at all. It's just like just keep an eye on this over the next couple months. And this is kind of the start of the end, but that doesn't mean to say that we don't have a long way to go, because these guys don't, they've just started scaling out, and they definitely don't perfectly time the top. So